So, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, April the 9th, 2022. I hope that all of you had a great week last week. I did. Very profitable week for me last week, and I hope that you guys are doing well in your trades. We'll get underway here right now. We're going to take a look at key support resistance levels in the markets. More importantly, strategy and things to keep in mind in terms of what exactly I'm looking for in my own trades and some things that might be of help to you moving forward. Market's been kind of a whipsaw. What I like is the market's been volatile. What I don't like is that the trend has been inconsistent, right? Even within days, we've had A-shape and V-shape reversals, so it makes it tough to do scaling in or position sizing when you have a limited time of window of opportunity. So we're going to take a look at some strategies that I found that have worked extremely profitably last week, notably going long, say UVXY when the market drops, or long SOXL when the market goes up, and going back and forth between those during breakouts or pivots. So that's a strategy that my live room members get plenty of exposure to, and I hope that you'll get with this as well. So let's start off by looking at the S&P. Our S&P is currently right here at the closed right under the 4,500 level. I don't see any story of the market. Do you guys? The market's not telling us a consistent story. It's a very inconsistent market. It's not bulls are in charge or bears are in charge. It's green day, red day, red day, green day, red day. And we're pulling back after a sharp uptrend. So it's anybody's guess as to what goes on next. That's probably not terribly helpful, but it's the truth. If you don't have a strong direction, if you don't have an edge, then you shouldn't be trading much. So we don't have especially strong charts. I guess Pfizer and Occidental Petroleum Oxy-Pete, my two favorite recent ones that I called out for my live room members. We'll look at those in a second. But big picture, I don't see any directional guidance for the S&P. It's one of those. It's not terribly helpful. I mean, we go long at new highs or short at new lows, but it's a pullback after a sharp uptrend in context of a downtrend. What's interesting is we broke resistance, so it did break the downtrend. Briefly, so as a technical trader, you want to see when rules are and key support resistance levels are broken. So we were in a downtrend, right? Lower lows and lower highs all the way down till here. And then we got a sharp reversal. Now, most of us Wall Street traders are expecting a reversal back down here, but we didn't get it. The market spiked up for a few days, and then it's been selling down the last 2 weeks. So our immediate trend is down. So I'm likely to continue to get into inverse instruments and have a relatively short bias. But big picture, it's a tough call. I don't see any clear guidance there. The one thing that does give us a little guidance is the VIX, right? I had a shooting star in the VIX on Wednesday, so that's a bearish reversal for it. But overall, the VIX is holding support here near 20. What you want to do is be bearish if the VIX continues to run up from 20 to 30, and 30 or so, maybe 32, is an exhaustion level for the VIX. So we want to have a short bias in the market if the volatility index travels back up here north of 22, 23 on its merry way to 30. That's the more important. You have my word on it. That's extremely important. I always look at the S&P in context of the VIX, not the other way around. The VIX tells all, right? So VIX is a kind of bearish indicator. When it goes up, that means it's the fear indicator, right? So when the VIX goes up, market goes down. When the VIX goes down, market's up. Now we're starting to see a bounce here, but it's not convincing, especially with a couple of topping tails here and a shooting star right there. So in this little uptrend context, shooting star. So signal to be aggressive bearish would be if we get over the 25 in the VIX, doing a pure candlestick analysis on that. And for more on candles, be sure to learn from my colleague Steve Nissen at candlecharts.com. Don't listen to anyone else when it comes to candles. He's the expert. So, and what he's taught me is to help me make so many winning trades over the last 20 years. So anyway, the point is, from a technical standpoint, we wouldn't want to go bearish unless we break above the upper tail of that shooting star over 25. But that only gives us a little room to run. So main thing is keep an eye on the VIX. If it stays under 20, especially, then we have a bullish market recovery. So that's your trigger to go for longs, whether it's swing trading or more aggressively intraday trades. If the VIX gets under 20, and holds under there, then we'll have a strong up market. And you'll see that reflected in the S&P. If, however, the VIX gets back up over 22, 24, and starts to spike towards 30, then you'll have a bearish market. This is kind of like the X-ray vision like the S&P is like looking at somebody like this. The VIX is kind of like the X-ray vision. You can see inside what's going on. So it's important to use both of those together as a team. Now, two of my favorite charts lately have been Pfizer and OxyPete. And Eli Lilly was good too. That's a wonderful chart, right? That's how a good swing trading chart should look like, LOY. A good point, Tim. Now, if we take a look at Pfizer, it's been strong the last couple of days. Really good spike to the upside. What I like about the Pfizer chart, and this is a quick tip, on your 3-month chart, for swing trading, it's always good to use a 3-month, 90-day daily candlestick chart. Look to see if we have recent largest green candle, which we do here is what my point is. When you have a largest green candle, widest range day in the last 3 months, recently, like we had Thursday, right? Thursday was a big run day in Pfizer. That's a strong bullish signal that good things are probably on the horizon. So I'm looking to trade Pfizer if it breaks above 56. Not a trade recommendation, but remember I said that when it's at 65. And you say, oh yeah, I was right. Anyway, so that's a move to the upside here. Small candle followed by large candle, followed by largest candle on the entire chart. Oils have been strong, obviously, and trying to get this cursor up here. Occidental Petroleum had a really good day yesterday. If we zoom in on the intraday, you can see. Well, that was yesterday. I called along at 58.30 for my members, way down. You can't see it here, right at 58.30. That was the long call I issued my live room members at Trading Open. Hey, quick note here, but speaking of which, before we continue on, a quick commercial message from our sponsor. That's me. I'm a one-man company. Helps me keep my rates down for everyone. We're going to be doing a trading gap session coming up this Thursday. And if you've ever been caught by false breakouts, which I've seen a lot of lately, right? We've got the, you've got some gap and trap or gap and crap, whatever you call it. Especially the under $10 low float stocks have been horrible. They'll gap up before the bell and then crash and burn and chop around all in. We want to learn how to not trade those and instead trade better gap patterns. So how to trade gaps, one of my more popular topics for both swing and day trading, okay? Because I want to cover both how to recognize a tradable gap versus a suspect gap, and you'll be looking at how to do that. That's coming up Thursday. This is yesterday. I don't know if anyone was trading SBPM, right? That was a gap that did that did nothing. It knows nothing. It went all the way down here and just crashed, right, from 11 down to 6. Dun 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 dun. Instead, we like gaps that go up like gold did, right? Metals have been strong, like GDX. Here's GDX 2-day chart. That's yesterday, and here's today. There's yesterday, and there's the day before. Anyway, minor gap that ran. So anyway, trading gaps, trademastery.com/trading gaps. It's a 1.5 hour, 90-minute live webinar, and you can ask all the questions you want. So that's coming up this Thursday. It's only $97, and that also gives you access to the live room for the rest of the month. So that's a bonus I add now to my premium webinars and so it's a better deal to do it now rather than later. So anyway, trademastery.com/trading gaps. And now back to our regularly scheduled program. I'm going to go ahead and stop the recording right now for all of you who are watching this on YouTube. Make sure that you register for the live events at trademastery.com so you can see the good stuff, which is about to come up for all the Intel. Wow, big turnout. Thank you all for being here, for all these smart people who are here right now live. That's all of you listening to me right now. I'm going to stop the recording so that we're under 10 minutes for YouTube and continue on with the best stuff coming up.